Hi traders, welcome to another edition of Weekly Forex Forecast on FSLess, which is for 20th to 24th of July 2020. In this week, I'm going to share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to like, share, put a comment down, hit the subscribe button as well, click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Remember, forex trading is an high risk investment as well and high reward investment, so do not trade with the money you cannot afford to lose. Here are the list of currency pairs I am watching out for next week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the switch. I have the euro paired against the Japanese yen. I have the US oil. And then we're going to wrap up things with the XAU paired against the USD or the gold. So let's dive into the weekly forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD, and the transformation we have right here is a movement within a symmetrical triangle. Like I always emphasize on, whenever you figure out a symmetrical triangle, it's a family of the doji formation, which means price can either break to the upside or to the downside. So that is what we are looking out for now as a price action trader. So we are patiently waiting for the right time whereby if price can break out of this symmetrical triangle or maybe to the downward. So here comes the key level structure you have to watch out for. We got the first key level structure, which acts at the price level of 1.27547, which was a rejection as a support for this zone right here. And then in the next key level structure we have to watch out for is the key level structure, which acts at the price level of 1.24668. So we need to pay close attention to this structure next week. So if the bulls can ensure a daily close above this dynamic resistance trend line right here, don't be surprised if the bulls retest the key level structure, which acts at the price level of 1.27547. And then if the bears failed to defend this key level structure right here, don't be surprised if the bulls pull up price to break above this key level structure, and then this means this is a signal of a bullish rally like we did have right here. We had a high swings right here, higher than this high right here, though this actually means price is trying to transform into a new high swing higher than the high right here, which is a signal of a continuation of a bullish rally, because right here we had a high low and then a high low right here, which means this trend right here is trying to transform into a new bullish phase. Alternatively, if the bears comes in next week whereby they enjoy a daily close below the key level structure right here, they still need to break below this dynamic support trend line right here. And then if the bears successfully make a break out of this dynamic support trend line of this symmetrical triangle right here, the bears still have to clear off this key level structure, which acts at the price level of 1.22632, which was a support for the trend rally right here. We can see right here at a support, and then right here we had a rejection, and then right here price held this support level, held price right here. Likewise, we had a series of rejection right here. So next week the bears have to clear off this key level structure before they can actually re-expose the dynamic structure right there, before they can actually head up to the next key level structure, which acts at the price level of 1.22632. That is, if the bulls fails to come in to defend this key level structure at the price level of 1.24668, and then the next key level structure, which acts at the price level of 1.22632. So next week, make sure you pay close attention to the dynamic structure right here, and then right here, and the key level structure of the price of 1.24668, and the next resistance key level structure, which acts at the price level of 1.27547. So let's relate the daily chart to the weekly chart. Here comes the weekly chart. We can see price is currently in a transformation within a bullish rising channel. we can see the key level structure, which has at the price level of 1.27547. We can see this is a very strong key level zone we have to pay close attention to. We can see the picture properly on the weekly chart. We can see it acted as a rejection zone right here, as a resistance, and the right here, a rejection right here, and the right here, rejection right here. Likewise, right here, a rejection right here, and the right here as well, we had a rejection right here. So we can see right here how price keeps on reacting to this key level structure. So it's a very strong key level structure. That is a 1.2754, a key level structure we have to pay close attention to. So don't be surprised if the boost find it difficult to break through this key level structure. Alternatively, if the boost should ensure a daily close above this key level structure, then the next level to watch out for is the resistance trend line, which acts right here, which is the resistance for this bullish rising channel. And then we can see the key level structure right here as well. That is a support of 1.24668. So let's get back on the daily chart frame. So next week, I'm gonna patiently wait to see what the bulls and the bears have to get done at this medium right here. The next currency pairs on our watch list is the euro paired against the USD. In my last weekly forex forecast, I discussed about the potentials which lies right here. That is a bullish flag we had right here, and I said this transformation right here in a bullish flag, have high tendency to make a continuation of rally to the upside. And then we can see how the next key level structure, which has at the price level of 1.14130, actually tried to reject price downward. That was on Wednesday and then Thursday, but Friday candle did ensure a daily close above this key level structure right here. And then in one of my weekly forex free webinar class which I held, I discussed about those who want to actually short right here. I said the transformation I have right here is not a kind of a very strong bearish price action signal to my own kind of liking. So I'm gonna zoom in properly on this chart so we guys can figure out what I mean right here. Zooming in right now, you can see right here the bearish pin bar which actually carved right here is not a very aggressive bearish prayer pin bar. So that is why I neglected not to short right here. And we can see those who try to short right here, our trend later reverse up, thereby pulling them up. So those who have their stop loss the extreme weak of this bearish pin bar actually are still in the trade, but the chances of having a bearish trend rally right there, it's very low, for the fact price did ensure a daily close above the key level structure, which acts at the price level of 1.1430. So let's check the 4-hour chart frame. Here comes the 4-hour chart of the euro paired against the USD. We can see the transformation, the pole, the flash, and the breakout. And what we can figure out again, we have the breaking out in another bullish rising channel. So I'm gonna zoom in on this currency pair so you guys can figure out properly the price action right here. You can see the transformation right here in this bullish channel. Those who actually want to short right here, they are being reversed up, and those who want to actually buy right here by the formation of the bullish engulfing bar right here, they will be reversed down. And I discussed about the action which occurred right here in my free forex webinar class that was this week, which I held out. That was on Thursday. I discussed about the formation right here to act as a tendency to act as a bullish force breakout, whereby this turns to a bullish trap. We can see how buyers were being reversed downward right here. Likewise, we can see right now price is still in transformation within this rising bullish channel right here. So for the fact price is still within this bullish channel right here at the extreme right here, and we can see the fluctuation of price, whereby this minor key level structure right here and the right here actually acted as a rejection, as a support for this rally upward again. So what I can figure out right here is what is being called clustering of price to a certain zone. Here comes the retest, another frequent retest right here, a retest right here, a breakout. So the formation right here, it's a signal the bulls are not giving up at this trend right here. They are trying all what they can to make sure they ensure a breakout of this bullish rising channel. So let's check back on the daily chart frame. And then here comes the daily chart of the euro paired against the USD. So we can see the resistance point zone right here, which is the price level of 1.14960. whereby if the bulls successfully make a rotation, they have to break out of this key level structure before they can aim higher. So let's check on the monthly chart of this currency pair. Here comes the monthly chart of the euro pair against the USD, and then you can see price is currently in a transformation in what? A symmetrical triangle that is on the monthly chart frame. And then, like I always emphasize on, it's going to take a monthly close above this dynamic resistance trend line right here before we can actually know the fate of the euro pair against the USD. Maybe it's going to transform in a bullish aggressive rally on a new multi-year rally. So let's check back on the daily chart frame. Back on the daily chart frame. So if the bulls can ensure a movement upward, they have to break out of this key level structure, which acts as the price level of 1.14960, which was a rejection zone. That is a resistance right here. So the bulls have to break out of this key level structure. And then if the bulls fail to break out of this key level structure, don't be surprised if the bears pull up price downwards to retest. That is a broken key level structure right here, which acts at the price level of 1.14130. Alternatively, next week, if the bulls fail to ensure a healthy bullish momentum right here, the bears can step in, whereby they make a rotation of price downward to retest the previous key level structure of the 1.13378. And then we can see the rejection zone right here, likewise right here, likewise right here, and then we had it right here. So this is a very strong key level structure. The bulls have to do all what they can to defend the key level structure, which acts at a price level of 1.13378. Failure for the bulls to defend this key level structure, don't be surprised if the bears comes in aggressively to pull price downward to the previous key level structure, which acts at a price level of 1.12326. So next week, I want to patiently wait to see what the bulls and the bears have to get done at this midpoint of the price level of 1.14130. My action will be based on the daily close of candle on this currency pair. The next currency pairs on our watch list is the USD pair against the switch. I discussed about this currency pairs in my last weekly Forex forecast, and I stated the transformation we had right here is a symmetrical triangle, which led into breakdownward of price right here. And then again, we are having this larger transformation right here, and which I stated it has a probability to transform what into a bearish downward trend. And then we can see that right here. This is actually playing out, and then we can see how the key level structure of the price level of 0.93859 is actually holding price. We can see it acted as a rejection zone that is support for this short bullish rally right there. Likewise, rejection for this aggressive bullish rally upward right there. So this key level structure of the 0.93859 XL key level structure, we have to pay a close attention to. It's a very strong major key level structure. So next week, I want to figure out what the bulls and the bears have to get on as this medium right here. We can see as well how the dynamic support trend line of this transformation of this symmetrical chart pattern right there is actually rejecting price, thereby showing signals of a potential dynamic resistance trend line. We can see the series of rejection right there. So what I'm looking out for on this currency pairs next week right here is I want to see what the bulls and the bears have to get done at this medium right here. If the bears can successfully make a rotation downward to break below this key level structure, they have to ensure a daily close. And then if the bears successfully ensure a daily close below this key level structure of the 0.93859, don't be surprised if the bears pull off price downward to test the next key level structure, which acts at the price level of 0.92437. Alternatively, nothing is impossible in the market. If the bulls comes in next week, whereby they ensure a daily close of price above this dynamic trend line right here, whereby this dynamic trend line right there fails to act as a potential dynamic resistance level for price action right here, then it actually means the breakout right here is a formation of what? A false breakout. Then don't be surprised if the bulls eventually ensure price movement to retest the previous key level structure, that is a resistance level, which acts at this price level of 0.95084, which acted as a support right there. We had a rejection right there, a rejection right there, and then we can see how price struggled to break out of this key level structure right here and then right here. So next week, I want to see what the bulls and the bears they have to get done at this medium right here. So pay a close attention to this zone right? So let's check out what is actually happening on the weekly chart frame of this currency pairs. Here comes the weekly chart of the USD pair against the Swiss. We can see the aggressive bearish movement downward right here. And in my last weekly forex forecast, I stated it's going to take a weekly close below this major key level support zone right here. You can see how it acted as a rejection right here, and we can see how it acted as a rejection for this bullish upward rally that was dated back to 2018 right here. And then as this zone right here in the April 2020, we can see as a rejection to this high swing right here. So a daily close below the key level structure, which acts at the price level of 0.93859, actually means the bears are willing to retest the next key level structure, which at the price level of 0.9243. So checking back on the daily chart right now, I will patiently wait to see what the bulls and the bears have to get done right here next week. That is on the daily chart frame. The next currency pairs on our watch list is the euro pair against the Japanese yen. And then we can see our price made a bullish aggressive rally from the swing low right here up to the swing high right here. Then we had a pullback of price downward to this level right here. And then we can see our price carved a bullish engulfing bar right here, which resulted into upward movement of rally upward right here. And then the next key level structure we have to pay close attention to on this currency pairs is the price level of 122.717. That is right here, which is actually a resistance level right here, and then at this level right here. So to figure out the whole picture of this currency pairs, we have to check out on the weekly chart frame what is actually going on right here. So let's navigate on the weekly chart of the euro pair against the Japanese yen. And then here comes the weekly chart of the euro pair against Japanese yen. We can see the transformation of price through this bearish channel right here. Our price broke this dynamic resistance trend line of this bearish channel, and then I'm gonna zoom in properly on this currency pair so you guys can figure out the whole price action right here. And then what can you guys figure out on this currency pairs? I can figure out a formation of a double bottom right here. Here comes the first swing low right here. We got another swing low right here. We can see the transformation right here, and the right here. You can see from this swing right here. So here comes the neckline. That is a price level of the 1.22.717. So this is the neckline. We can see how we had a first breakout right here, whereby price failed to close above the neckline of this double bottom formation right here. So again, price is approaching this same key level structure, which is acting as a neckline, and that is a price level of 122.717. So the bulls need to ensure a weekly close above this key level structure before we can know the next movement of the euro pair against the Japanese yen. Maybe the bulls are willing to pull up price to carve another swing higher than this high swing right here. And if that should occur, it means the euro paired against the Japanese yen is trying to set up another formation of a bullish upward rally, which could lead to the exhaustion of this bearish downward trend right here. So next week, we have to pay close attention to this key level structure, which acts at the price level of 122.717. And then let's check back on the daily chart frame. As I stated on the weekly chart frame, that the key level structure of the 122.717 is the neckline right there. This is the neckline zone key level structure. So the bulls need to ensure a daily close above this key level structure next week. And then failure for the bulls to ensure a daily close above this key level structure. Take note, this major key level structure is being drawn from the weekly chart frame. You can see the rejection right here, right here. So we need to figure out a well-held strong bullish momentum before we can actually anticipate for a bullish upward rally to break above this last swing high right there, which was a false breakout on the weekly chart frame. And then if the bear steps in next week at this key level structure, whether the bulls fail to ensure a daily close above this key level structure, don't be surprised if the bears pull up price downward to retest the previous key level structure, which acts at the price level of 121.099. We can see how we had a rejection right here, and then right here, and then right here, and then right here. You can see that we also had a rejection right here. So this key level structure of the 121.099 is a strong key level structure the bulls have to defend. Failure for the bulls to defend this key level structure, don't be surprised if the price of the euro pair against the Japanese yen drastically depreciate in value to the next key level structure, which at the price level of 118.684, and then this is the dynamic trend line of this no bearish channel. So next week, I want to patiently wait for what the bulls and the pairs have to get done at this medium right here. Maybe the bulls are going to be successful to pull up price upward, or maybe the pairs are going to make a rotation downward to the key level structure of the 121.099. So Europe paired against the Japanese yen is on my watch list next week. Next on our watch list is the US oil. I haven't been discussing about the US oil for the past weeks right now, to the fact I can't figure out a well-defined price action right here. There isn't volume right here, there isn't momentum right here. So right at the moment, the US oil is currently in a state of consolidation. So here comes the resistance key level right there. There is a major key level structure which after the price level of 42.01, and then we can see the next key level structure that is the support level acts at the price level of 34.93. But what I can figure out going on the US oil, let's check on the 4-hour chart frame so we can see what is actually going on the lower time frame. Here is the lower chart frame of the US oil. We can see transformation of price in a bullish narrow wedge. We can see how price have been retesting this minor level continuously right now. So what I can figure out right there is a clustering of price to this minor level right there. So this could set the price of US oil to retest the major key level structure, which acts at the price level of 42.01. So at the moment right now, the US oil is still on my watch list, but I can't figure out a well-defined price action right now. Also, I can figure out reduction in bullish momentum right here. We can see the upward bullish rally right here, and then right here we can see right here now consolidation phase right here. That's consolidation right here. So at this medium right here, there isn't much on the US oil, so there's high tendency for price to make a break downward right here because there is depreciation weakness in the bullish upward rally right here. So it's a time for you to keep on watching the US oil. Have your ends been crossed. When the right time comes, you look for a well-defined price action. So I am giving out this analysis based to the massive requests I have gotten from my subscribers and some of my students. So if you are trading the US oil at the moment right now, there isn't momentum, there isn't liquidity. Liquidity is what brings the money in this market. Whenever there isn't liquidity, it means there isn't trade. So just have it on your watch list next week. If anything can just occur in the market, then you grab the opportunity. It's time we wrap up our analysis with the XAUUSD against the USD or the gold. We can figure out gold at this point right here is actually going through a state of consolidation. Even though we longed this gold last week, the trading idea was being generated from the 4-hour chart frame. And then what I'm figuring right now is right here is a bullish weakness, as we can see right here now. So in an upward bullish rally whereby there's a consolidation phase, price have high tendency to continue into the upward rally, which means our price is actually in a state whereby they have to gather momentum to continue in such bullish upward rally like we did have right here. Consider the consolidation phase right there, which actually led to the bullish rally upward right there. So don't be surprised if this consolidation as well transform this previous bullish upward rally right here to another bullish upward continuation rally upward. So let's check out the 4-hour chart frame of the gold. Here comes the 4-hour chart of the gold. We can see consolidation phase and then upward bullish channel. So on the 4-hour chart, I'm gonna zoom in so we can figure out properly the bullish channel right here. Here comes the bullish channel. And then what can you guys figure out right here? We can see after medium right here, price broke out from this swing right here, upward right here. And then we had another formation right here of a what of another bearish channel in a bullish rising channel. So technically, what I can figure out on the 4-hour chart frame, there is a more factor supporting more bullish upward continuation rally, and then we can see how the key level structure, which acts at the price level of 1797.907, actually serve as a point of rejection. I'm gonna zoom in so you guys can figure out the series of rejection we had right here. Okay, we can see right here we got a rejection, little rejection right here, we got a rejection of a support right here, we got a rejection right there, and then we can figure out this rejection now transformation into short bullish rally, and then we can see how the dynamic trend line resistance of this short bearish channel right there, even though the slope of this bearish channel right here is somehow very, very low, which means it's not an aggressive bearish channel right here. So we can still refer this as a consolidation on the gold. So at the moment right now, gold is in a state of consolidation. So what I am looking out for is to see if we can see a well strong bullish price action to aid more on the price of the gold. Alternatively, nothing is impossible in the market. If next week, whereby the bears comes in and ensure a daily close downward below the dynamic structure of the rising bullish channel on the 4-hour, and then ensure a daily close below the key level structure of the 1797.907, then don't be surprised if the price of the gold depreciate in value. So let's figure out the key level structures on the monthly chart frame. So here comes the monthly chart of the XAU paired against the USD or the gold. We can see month of June actually carved a bullish engulfing bar to the month of May. So I'm gonna zoom in so you guys can figure out properly this bar formation right here. Here comes the month of June bar. It serves as a bullish engulfing bar to the month of May, and we can see the month of April, bullish bar, and then we can see right now the month of July is actually making a bullish aggressive upward rally. So what I can figure out based on the monthly chart frame, there's high probability for gold to ensure more upward bullish upward rally, for the fact of the past historical record we had right here. So I am still in anticipation for more bullish rally on the gold, but I'm gonna have to patiently wait to see what the bulls and the bears have to get done on the daily chart. So let's check the daily chart frame. Back on the daily chart frame, our consolidation phase right here, we can see that. So the bulls have to make sure they defend this key level structure of the price level of 1797.907 before they can actually have high probability to ensure a more bullish upward continuation rally. Alternatively, if the bulls fail to defend this key level structure right here at the price level of 1797.907, then don't be surprised if the bear steps in aggressively to pull price downward to the previous key level structure, which acts at the price level of 1748.515. And then if the bulls fail to defend this key level structure right here, which acts as a rejection right here, as a rejection right here, and as a rejection right here, we can see as its front resistance right here, resistance right here, and the resistance right here, and the support right here. If the bulls fail to defend this key level structure right here, then don't be surprised if the price of gold depreciate in value drastically to the key level structure of the 1682.156. So this is what I can figure out on the gold. So next week I'm gonna patiently wait to see what the bulls and the bears have to get done based on the key level structure of the 1797.907 before we can actually know the next probability of gold movement in the year 2020. So guys, that is all I have for you in this weekly forex forecast, and thanks for watching this video from the beginning to the end. If you haven't joined my free forex trading class, there's a link at the bottom of this video. Make sure you click on that link so you can get access to my free forex trading class 3 times in a week. 3 times in a week I do hold free forex trading webinar class. And then if you haven't joined my VIP members community, there's a link under this video as well. Make sure you go through that link so you can become a member of the VIP community. In this VIP community, you have access 24/7 to communicate with me one-on-one, ask me questions, and then also view, check my trading decision in the market, my entry level, stop level, and the take profit target. Not only will you have access to my personal trading decision, but as well learn more how you can become a disciplined, successful, and profitable trader in the market. And then do not forget to like this video, share this video, put a comment down, subscribe to this YouTube channel, as well click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. That's all, and then have a wonderful weekend. Peace.